And so therefore it's going to take a lot to get me to run because I actually have to see a path to victory. But if I saw a path to victory, a credible path, not like a crazy long shot, then sure, I would certainly be willing to do it. I mean, but I don't know that situation is going to present itself to me, but we'll see. I keep an open mind. Do I think a Kanye West administration could turn this around? No, I don't. I mean, Kanye West is not going to get elected president. I mean, he's not even on enough ballots. And obviously, I mean, he's got no chance. But no, I even if he for some reason, if he became president, I don't think that he would do anything that would change the dynamic. So I think that was more of not know if it was a joke or publicity stunt, whatever, was involved in his campaign. It'd be interesting to see how many votes he did get. I mean, on the ballots he was at. I mean, I doubt it had any effect on the outcome of the election. I mean, even the Libertarian candidate, as many votes as they get, I mean, never really impacts. I think the one third party, I think Ralph Nader may have had an impact a little bit. I mean, certainly Ross Perot had a major impact. I mean, Bush may have been able to win, but for Ross Perot. So Ross Perot may have been the reason that Bill Clinton became president. But other than him, I think maybe George, Bush, Bob W. might have been able to beat, was it Gore or whatever, based on votes that were siphoned away by a third party. Ralph Nader, I think it was Nader or somebody. But generally, they don't make a difference. They just don't get enough votes to even sway a close election. Okay. Brian Renault, if you added to your investments, would you put more in gold mining or physical silver? Well, look, I think physical silver has the potential to outperform gold. And obviously, gold stocks have the potential to outperform silver. But obviously, silver stocks, if you really want to be bullish on silver, you can buy silver stocks, right? You can buy the miners that particularly focus on silver and then have even more leverage to silver. So you can do that. I mean, my gold fund does have exposure to silver stocks. We own a number of silver stocks in our top holding. But the holdings are dominated by gold miners, not silver miners, even though we do have silver miners. And of course, the major gold mining companies have silver. They do mine them. They're just not pure plays on silver. But you can find companies that are, mostly silver. But even the silver companies, still, they're going to end up with some other metals that they produce, even if they're predominantly mining silver. Let's see. We take another look at the market. Still very, very steady. The Dow is up a couple hundred points. I mean, not a big move, especially considering, the type of moves we've had the last couple of days. We had a very weak stock market. We had the weakest stock market in the week before an election in the history of the stock market. So we had a big drop, and we recovered a lot of that in the last couple of days. Instead of having a big crash, I thought maybe we would have that. We had a rally. We gained back a lot of that lost ground, but I still think that we could end up giving it up and have a big decline once the outcome of the election is known. Because I still think a buy the rumor, sell the fact is likely, regardless of what the fact ends up being. I think regardless of who wins, I think the market should go down because it's so overpriced. But I do think a Biden win is worse for stocks than a Trump win. So, I think all the people who have been saying that a Biden win with a Democratic Senate is the best possible outcome, I think they're going to regret that because I do think it's an example of, being careful of what you wish for because you might get uncomfortable sitting in this chair. All right, let me get back to this. Let's see what the currency is, because I looked at the currencies. The dollar is rallying a lot stronger now. You now got the euro down about 0.6%. The euro back at about 116.5. Weakness across the board. So again, the currency markets would suggest to me that the markets are betting Trump right now, because a Trump victory is at least being handicapped as being good for the dollar. I don't think it is. I think the dollar is going down regardless, but I think the immediate outcome of Trump winning should be bullish for the dollar. And so the dollar is strengthening on the day. And again, the Chinese yuan now is down 0.6%, which again is a pretty big move for the yuan. Let's see, where was I in these questions? Peter, do you think based on this bad economic growth, we will see factored in stagflation? We are going to see big P multiple compressions. Look, we're going to get stagflation, right? I mean, that's the economic environment. I mean, it could be a lot worse than stagflation because it could be an inflationary depression. That's what I've been saying. Because stagflation, that the 70s, I mean, it sounds kind of mild. I mean, if we have a depression and inflation, an inflationary depression is more of what I see coming, because stagflation just seems too tame a word to describe what we're likely to experience. We're going to experience the 70s on steroids. The economy will be worse and the inflation will be higher. So I don't know that you want to just call it stagflation, because that may not do justice to just how bad I expect things to get. Hold on here. Somebody is asking me about Pecos Gold, a gold-backed crypto lending platform will pay interest. What's your opinion? Like, I would stay away from any of these investment gimmicks for gold. This is a very, very low interest rate environment that we are in. And if somebody is going to get you a decent rate of interest on your gold, they are putting your gold at risk, and you may not get it back. And the only way they can pay you interest on your gold is to loan your gold out. So the person they've loaned it to has to pay it back. And obviously, if they're paying you interest, they're charging the borrower a higher rate than they're paying you, because they have to make a profit. And the question is, will the borrower be able to repay? And my guess is that somebody who is borrowing gold is probably not as creditworthy as somebody who is borrowing fiat. Because if I had my choice, I would much rather borrow fiat, because it's going to be easier to repay the loan. The other problem is, what if somebody borrows gold and then the price of gold goes way up? They may not be able to repay the loan. In fact, that is the irony of it. If you are loaning out your gold, the bigger the increase in the price of gold, the less likely it is that you're going to get your gold back. And if you're buying gold because you think the price is going to go way up, and the odds of you losing your gold are greater the higher the price goes, then why take the risk? For such a low rate of interest, why get involved in these schemes? Because it's when gold makes the biggest move that you have the greatest likelihood of losing. And now you have an even bigger loss because you're not getting paid back gold that has much more value. Obviously, if gold goes down and you've loaned somebody gold, they're going to have a much easier time paying you back if the price of gold has gone down than they would if the price of gold has gone up. So if you're very bullish on the gold price, it makes no sense to get involved with any of these things. I think it's just too much risk. The gold is supposed to be the conservative part of your portfolio, to preserve your wealth. So don't put it at risk by loaning it out for a relatively small amount of money. To the extent that you